Top 20 life insurance questions in the U.S. Number 5, what does life insurance cover? It covers anything you want it to cover. Whenever you die, your family gets a check for whatever the death benefit is, the amount of coverage you have, and they can spend that money in whatever way they deem necessary. They could pay off the mortgage, help raise the kids, they can invest it, whatever the case may be. They get full control over the money. The life insurance company is not going to ask for receipts. It's their money. Right? So if you've got a $500,000 coverage, you die, your family will get the check for $500,000, whoever you designate, and then they get to do with the money whatever they want to do. Living benefits. These are really good. Most really good life insurance companies come with something called accelerated death benefits, meaning that if you get diagnosed with a critical illness, like say you've got 12 months to 24 months to live, what the life insurance company will do is they will advance you $500,000 of your policy amount while you're alive, up to 75%. So in that time, you can maybe take a family trip. You could do some things that you've always wanted to do with the family. You could seek alternative treatments, whatever you want to do with that money. And when you pass away, the remaining amount of your life insurance policy will go to your family. What are riders? Riders, in my opinion, most of them are ways to extract more money from you. Some of them are useful. I would say the child rider is where you get $10,000 for a child or children up to $10,000 for $2 to $3 a month extra. I don't think that is a bad thing to have. Hopefully you never ever have to use it, but that's the only one that I would really be keen on, even pitching to a potential client. The ones where disability riders, those could be useful. I've never seen them actually being used. They typically increase the policy amount, the amount of money you pay by like 30 to 40%. So I try to keep that in mind whenever I'm working with people. I don't want to add anything to their policy that's just going to extract money and not be useful. Exclusions. That's a question about exclusions. Now this is called the contestability period. All life insurance policies come with a 2-year contestability period. That doesn't mean you're not covered or your family won't get the money. That means there are certain things that could cause your death that might exclude them from receiving the money. Like if you commit suicide in the first 2 years, if you commit a major crime and you're killed by the cops in the first 2 years, those things would prohibit your family from getting the money. Like after the first 2 years, they don't have any recourse on those things. Hopefully you don't do any of those things, but you should be aware of those. What is a waiting period? A waiting period is for whole life policies. It's a 2-year waiting period before your policy becomes active. These are called guaranteed issue or guaranteed acceptance policies. That means you pay on your policy for 2 years before it becomes active. These policies are only good if you have a major health issues and you can't get qualified for day one coverage. So do not get a guaranteed acceptance or guaranteed issue policy if you are relatively healthy. All right. So that kind of goes over what life insurance covers. If you have any questions, feel free to text me, call me, set up a time. We can go over some things. All right. Talk to you later.